Hello traders, my greetings to each one of you. Welcome to my website and congratulations for well receiving this product. This is my most precious gift for you finally. This is King of Forex from the 1% Club. In this video I'm going to give you the whole secret of Forex trading, how we, the 1% Forex traders, trade the market every day, how the most successful 1% Forex traders trade the market on daily basis, and why 99% of traders are losing while only 1% are winning. First of all, I will start with the secret. The secret is made out of, it's a statement made out of 6 words only. And I will say it and I will be writing it. The secret is the following. Pay attention, listen carefully. 99% seek winning, 1% seek failure. I repeat, 99% seek winning, 1% seek failure. So I will write it down. %99 seek winning and just 1 second. That's it. 99% seek winning, 1% seek failure. As you can hear and as you can read, I know it's a shocking truth about Forex trading. How is that? The 99% are the losers in this career. How the losers, since they are seeking to win, how they end up losing? And on the other hand, how is the 1% successful Forex traders, since they are seeking failure, why they end up winning and winning big? Of course, everything is revealed in this video. But just to make you understand it, imagine when you are going to the gym and you want to build the right muscles. What are you seeking exactly is failure. You will be making, let's say, the biceps. So you will be training your biceps. First time, up, down, second time, third time, 10, 11, 12. When do you stop? When you are really tired, when you cannot elevate your hand anymore, when you cannot even use your hand anymore. So actually you are seeking failure. You want to fail in this biceps training in order to build your biceps muscle. So in this sense, the same sense which is also in the whole life, you have to, or actually to be in Forex trading, to remain in Forex trading, you have to be, or the 1% are seeking failure in this sense to win. Okay, so everything is going to be revealed. Watch it till the end. First of all, I will start with the chart, how to set up the chart. That's it. It's a pure, clean chart, new chart. First of all, you go to properties, and I always prefer with the 1%, prefer this one, the black on white, okay, with the common show as client, show OHLC, open, high, low, close. These are opening price, high price, low price, closing price of any candle, of actually the most recent candle. Show period separators, so for example in the daily or in any time frame you will know that the period has ended. Remove grid, and also in colors you can also choose the color of the candles. For example, a bar up, you can make it, it's very famous to make it green, and also bar down red, so you can change it from here, and also bull candle green, red, bull candle green, and bear candle red. So I will make it also in this way. So bar up green, instead of searching for it you can write it green, bar down red, bull candle, take a look how the chart is changing, bull candle green, bear candle red. That's very professional with these comments chosen. Okay, so that's the chart. You will select this one, candlesticks, and also from properties, from here, instead of bar chart or line chart, select candlesticks. Okay, from properties. Okay, perfect. So the chart now is available in front of us. Click on this one to see the bid and ask price. Okay, it's faster to buy and sell from there. And now you have to place your indicators. First indicator is volume. So you go there to volume and volumes. Nothing, default settings, just click on OK. That's the volume. Then you will need the moving average applied to volume, which is EMA 20. So what you do, you go here to the navigator tab, you keep scrolling down to find moving average, this tab, moving average, or you can find it below trend. So indicators, then trend, then moving average, or sometimes directly indicator, moving average. So you click on it, you drag it till the volume indicator, you release the mouse here, you choose period 20, MA method exponential, apply to first indicators data, not close, and I choose the red color. You can select a different color. Click on OK, and that's it. Now EMA 20 is applied to your volume indicator. Then you will be selecting moving averages one by one. Let's start with this one, 20 exponential, close, red. Perfect. Other one, 50 exponential, blue. That's it, blue. Also, moving average 9. I choose a purple color, which is here. Either medium state blue and okay, this one is perfect. Medium state blue is a good one. Of course, you can choose any colors that you want. The last one, 200, I always prefer it to be in green, lime green, exactly. So here we are. Let's check them again. 200 exponential close, lime green. 50 exponential close, blue. 20 exponential close, red. And this one, 9 exponential close, medium state blue, with volume indicator and EMA 20 applied to the volume indicator. That's the chart. Now you can start trading. That's the full setup. So now you have learned the secret in this statement at the start of this video and the idea behind it. and now you know the full setup that you need to start trading. So what you need in the moment is, of course, the gold, which is the strategy. Pay attention carefully, focus, leave everything in this moment, just focus on this video. Okay, so first of all, we're going to start from there. Let me explain it very clearly. EMA 200 is the baseline. EMA 200 is your reference. EMA 200 is a secret by itself. We are on M1 time frame. Pay attention on 1 minute chart. You can use it, you can trade it on any time frame, of course. But on 1 minute time frame, it's preferred because you will have lots of opportunities. You will be entering lots of opportunities, and these opportunities allows you to make lots of profits if you are using very well the strategy. So on 1 minute time frame, you will have lots of opportunities. You will have lots of convenience, peace of mind. Your orders are not open overnight when you are sleeping. You don't have swaps for the next day and also the next week. As you know, the swaps are tripled 1 time per week, and everything for M1 is the preferred, but you can also trade it on other time frames. So let's continue. We have EMA 200. Okay, EMA 200 is the baseline. Pay attention. Everything starts and ends in EMA 200. So the market is divided into phases. Each phase starts from EMA 200 and ends on EMA 200. Okay, so let's see it here. This phase started from there. Okay, the market trended down, reached EMA 200 there. This phase ended here. A new phase started there. Again, ended here. New phase, ended new phase. Here the price was many phases, because actually each phase is one candle almost, so here it's nothing. From there, new phase, end of this phase, and a new phase again. So each time, new phase, this one, a new phase of the market. This is the end of this phase. Okay, so the market is divided into these periods, and each period starts from EMA 200 and end on EMA 200. That's clear? Let's continue. In each period or phase, the market will either be going away from EMA 200 and returning immediately, or going away and taking so long to return. Sometimes hours and sometimes in minutes. So you don't have a rule for the market that it should be returning to EMA 200 within 1 hour. No, it's not like that. The market will get away from EMA 200, either from up or from down, below it or above it, and will return sometimes in minutes, sometimes in hours. It depends. Okay, we are talking about M1 time frame, of course. On the daily basis, daily time frame, it takes longer, and of course that's logic. Okay, so the timing of the market, the timing of these phases, these periods, when to start and when to end is not specified. Sometimes it's long, sometimes it's short. And during these or each period of the market, either it's a trend, the market like here was trending down, or it's a consolidation or a ranging market. The market is going like that and then returning, and then going away and returning. Okay, and sometimes trending like here. That's all what you need to know about the division of the markets, the parts of the markets. When you know the whole secret, so in the upcoming of this video, you don't need to analyze the chart. Imagine how powerful it is. You will not need to analyze the chart. Am I in a trending market or in a ranging market? Because that's very hard to analyze it. When you know the whole secret, you will not think about ranging and the trending market. Just think about it, how powerful it is. Let's start. So I will start now. From now on, focus as much as possible. Put all of your focus, 100% focus. I will be explaining step by step the full guide, how to buy, how to sell, when to close, everything of this strategy. Pay attention and watch. When the candle or the price start being away from EMA 9, I repeat, when the price is away from EMA 9, for example here, if you take a look here, the price is away from EMA 9. Here is your entry. So when to enter? Whenever the price is away from EMA 9. When to close? Either you will be closing on EMAs, either 9, 20 in between. So your close is on EMAs. Okay, that's clear for the moment. One remark which is very essential: why EMAs are used in the whole secret. So you can understand why we are using EMAs before we continue. Now you have learned when to enter, and you will enter when the price is away from EMA 9. You will be exiting when the price is close to EMAs. Okay? Of course, I will be explaining step by step. Just focus why EMAs are used. Why? Because, as you know, forex trading is divided into two major parts, which are technical analysis and fundamental analysis. In technical analysis, all of the indicators are made out of moving averages. If you take the stochastic, for example, or any RSI, everything is made, every indicator is made out of the sum divided by the number, which is the moving average. Okay, every indicator has a unique mathematical equation, and lots of the indicators are made by mathematicians. So therefore, every indicator is made out of EMAs. Once you are using EMAs, or actually MAs, simple moving average, basically, once you are using moving averages, you are almost using all of the other indicators, because the other indicators are made out of moving averages. Why we use EMA instead of MA, simple moving average? Because EMA, the exponential moving average, is much faster than the moving average. So the exponential moving average is much faster following the price. And in the most present candle, we need the fastest EMA to be giving us the fastest signals and fastest results. Okay, so that's why we use exponential moving average, because in its mathematical equation, mathematical calculation, the exponential moving average gives in its equation gives weight to the most present candles, and therefore it's much faster than moving average. And of course, trading is a quick market. You need to make quick decisions, fast decisions. So EMA, exponential moving average, is much more suitable than simple moving average. Okay, so now everything is very clear. Let's start straightforward. Like here, price is away from EMA 9. I have to enter. Is it a buy or sell? So keep focusing. Now I am revealing the whole strategy. Price is away from EMA 9. Should I buy or sell? Here I should sell. Why? Because price is below EMA 9. So let's write it to understand it. First of all, price below EMA 9, away, making a good distance with the distance. Okay, not just below it, so you need some distance. Okay, in this case, you sell. Okay, so price below EMA 9 with distance, you sell. Also, price above EMA 9 with distance, you buy. You enter your first order. Okay, it's clear. So here, price is below EMA 9, I sell. Here, price is above EMA 9, I buy. You just want some distance, sometimes little, sometimes big, okay? Of course, with practice, your timing will get better, but it's not a big deal. So, whenever the price is away from EMA 9 from below, you sell. Here is your first selling. If the price continue going down, you sell more. If the price continue going further down, you sell more. So first sell, second sell, third sell, let's say fourth, okay, last sell here. When to exit? As explained before on EMAs, when the price return, pay attention here. Since you are selling and selling and selling and selling, and the market is moving in your way, so you are in winning. And since you are seeking failure, you don't want to close here in your winning. You don't want to close on your winnings. You will be waiting for the price to reach EMAs. Obviously, the price is going to reach EMAs sooner or later. The price here reached EMA 9. If you are in a losing state after the price reached EMA 9, you should close. So you are in a winning state, you keep it. Because you are seeking failure. Remember what you have talked in the first. You are seeking failure. You don't want to be winning here. I know now it's conflicting, but just keep it with me till the end. You are selling, you are in a winning trade, you are selling more, you are winning. Okay, you don't want to close on your winnings now. You are seeking failure. Since the price returned to EMA 9, here you will be looking at your profits. If you started to become in a losing state, so if your profits are negative, immediately close on EMA 9. If you are winning on EMA 9 still, don't close. Leave it. Then the price returned down, you will be selling more here. Then the price returned to EMA 9, you don't close. Then the price returned to EMA 20, you don't close here because obviously here you will not be on losing. Because if there you didn't lose, how there? Okay? So price returned toward EMA 20. Here you will be looking at your profits. If your profits are negative here, you will close there. Okay? And then let's say your profits also there were positive still. So you remain, you wait for EMA 50. And then you wait. The market trended down further. Maybe you add a sell order here because it's slightly lower than this one. Also, the market returned, but you are still on winning. You don't quit. You don't quit. You sell. You sell. You sell. You don't quit. You sell. You don't close. And then here, imagine all of these are sellings. So when the market reached EMA 50 here, you are already in a very big amount of profits. Okay. So now the market reached EMA 50 here, and here you are still in profits. So following the strategy, you don't have to close here, but pay attention. Since this phase, this period below EMA 20 holded lots of time, let's say from almost 1 hour, and more than 1 hour, you can close your orders here with a big amount of profits. Okay, so you can close it here. In this case, you are quitting early on, but that's perfect. You have seen that you have made lots of profits riding this downtrend, and you said that since the price for a long time didn't reach EMA 50, I will be closing on EMA 50, and finally here you will be closing on EMA 50. Okay, but here you have closed just For one reason, because you saw that you have made lots of profits, which is great for you. You said enough, maybe the price will be going upward more, so I'll be losing some of these profits, and I want to close there to make sure these profits are in my pocket. Okay, so that's a logic to close there. Also, if you want to apply the strategy step by step, you will be waiting here because you are not in a losing state. You will be waiting, and pay attention. You are in this phase, so always you have to pay attention to the last of the phase and the beginning of it. So here we are. We didn't close on EMA 50 because we are still on winning. We are seeking failure. The price went up much further until the price reached EMA 200. Here you don't have any choice but closing. Why? Because the market has closed here. This period has ended. What are you doing again? This period has ended here. So you have nothing to do anymore. You just have to close there. And with all of these selling and these sellings, mainly there, either you are in zero profits or slightly positive profits. If you have closed here, it's much better. But that's fine. Trading is not about one entry. Here we only have one entry. Okay? Take a look. I will be applying the strategy for the whole market. Keep it up. So the end of you is in this is the end of your entry is at the end of this period, okay, which is here on EMA 200. Or if you have seen that the market is making lots of profits there, or maybe there, at any time, just understand it, at any time you can quit. At any time, once you see a huge profits, you can quit. But if you want to apply it step by step, you will be waiting for EMA 200, and here you will be closing. Okay, so this is very clear. Let's delete it. Okay, we'll continue. So we have closed here, let's say on almost zero or some slightly positive profits. From there, the market, we have ridden this downtrend perfectly this whole phase. From there, a new phase, a new period started. So price is close to EMAs, you do nothing. Price is below EMA 9, you start selling. Selling. Returned with positive profits. You don't close, you don't want winning. You are seeking the losing one in the right sense, of course. So you don't close here. Price went above. I think here you start losing from selling from there. So here you start losing, you close immediately with a slight loss here. Okay? And you wait for the market to get away from EMA 9 again, knowing that you are still in this one period. Okay? But since you have closed, you will be entering again even though you are still in one period. So here the price is a little away from EMA 9, a buy order here, but price reached EMA 9 immediately, so slight loss here. Then a selling one here with a slight loss there, and you continue. This one, the market is reaching EMA 200, so this period has ended, even though the market is away from EMA 9, so you should be buying there. You buy here and the price reached EMA 9, so you quit with a slight loss. Here also buy, slight loss. Here also sell, slight loss. And also buy a small loss, buy a small loss. And here also buy a small loss, sell a small loss. As you can see, you will be losing a lot, and in one winning you will be making a lot. Okay, that's it. So you have lots of losses, but each one is very small, very, it means it's almost zero. And especially if you are using a good account, the best accounts are mainly higher spreads but zero, or very low commission. If you can trade from such account, high spreads but very low commission, that's better, because in this case all what you have to think about is spreads. You don't have to think about commission, and spreads are in front of you as client is in front of you. Okay, so if you can get an account with low even higher spreads than the other one, but with very low commission that are almost zero, that is a great account to trade from. Okay, let's continue. Sell, slight loss, buy, slight loss. Okay, here you are at the end of this trading day, so you should not be trading this one, but okay, so just to understand it, I'll continue from there. Here the price is up, I start buying. The price returned toward EMA 9, but it's very close from your buy order, so mainly you don't have to quit there. You continue adding buying and buying and buying, waiting for the price to reach EMA 20. First time price reaching EMA 20, all of these are bought buy orders. Reaching EMA 20 is not enough, you are still winning. You continue and till there, here you start losing, so here you will be closing, or maybe on EMA 200. Okay, so EMAs are like a gearbox in a car. First one 9, 20, 50, and the last one 200. So your final destination is on EMA 200. Okay, if you are here winning, you keep. If you are here winning, you keep. And then on EMA 200, you will be closing because it's the end, the final destination. Again, buy and close. And here we are. This is present. So at this moment, from there, buy, 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 and buy, and buy. When the price reaches EMA 9 here, of course, you are in buying mode. And then you continue. Already you have bought here. Price reached EMA 20, you are still in a winning. You keep it. Price reached EMA 50, but you are still in a winning mode, so you keep it. Price is again up, you buy again. So imagine all of these are buy, buy, buy. If at this time the amount of profits is very big, or if your account is already flipped, you can quit at this moment, or you can still keep waiting for the price to go up much further. And for this one, EMA 200 here is still low, as you can see. So EMA 200 can go up much further. I mean low in the length of EMA 200. It's still small. So EMA 200 can make it larger in tough trends. It gets larger and larger and larger. Okay, so you can wait more for EMA 200 for this period to establish more, to get up much further. Okay, and once you are in a losing one, so you will be quitting either when you see your profits negative, you will be quitting, which would be either on EMAs or between, or you will be quitting on your final destination, which is EMA 200, and that's how you will be flipping your account. Okay, hope it's clear. So I will start applying it. Of course, similar from buying and selling. So I will be going as much as possible to catch trends and ranging markets, everything. Okay, so let's start from there. The market started from here, that's perfect. Let me zoom. Sell. Okay, so I'll be applying immediately. You have very well understood the strategy. Sell, sell, sell. We are still away from EMA 9. Sell. The price returned, but I'm still on winning. All of these are sell. I don't close. Sell, 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 sell. Return to EMA 20, even though I'm still winning. I don't close. I'm seeking failure. Sell, sell. My last sell is here. Price return toward EMA. Either I quit here with a good amount of profits. Okay, so this is my decision to quit here. And or either I continue the strategy. This one went toward EMA 50. Here I'm still winning, and almost there I start to lose, so I'll be closing there. Once I closed there, I wait for the price to get away from EMA 9, and I also always pay attention to which period am I in. Okay, so this period has ended here, starting from EMA 200, ending on EMA 200. Again, as you can see, the price here went up away from EMA 9. It was a great buying opportunity there. So I start buying and buying and buying, okay, till the price reaches back EMA 9. I think here I will be in a losing mode. I quit there. Here nothing, price is very close from EMAs, nothing. So what you should be focusing on is the distance between price and EMA 9. Okay, pay attention to that. Here price is away from EMA 9, but still at this candle price was, or this candle was attached to EMA. As you can see, this candle was attached to EMA 9, so it's not logic to enter this one here. So you keep on waiting. Price is reaching EMA 9 again and again. And from there, this is a great selling opportunity. Sell, sell, sell. Closing here with a loss, I think. Or maybe there. Then from here, sell, closing with a loss. Okay? Sell, sell, and close with a loss. Here, buy, 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 and close with a loss. Here, buy, and close with a loss here. And your loss is really nothing, okay? Buy, lose, buy, close with a loss. Okay, I'll be showing you a big winning after all of these losings. That's it. Buy, 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 returning here, it's nothing. You are not losing here, so you keep buying, 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 buying. Imagine starting from almost 0.98515, we are on AUD CAD, till 0. Of course, buying, 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 returned here, you are still winning, so you don't close. Buying, buying, buying. So from 98.5 to 98.8, that's perfect. You are still buying because the price is returning, but it's not making your profits negative. You are still, and here at EMA 200, this is the end. The trading has ended, the period has ended, you will be quitting here. So imagine riding this uptrend. And this is nothing really. You can still catch bigger trends. Okay, like here for example, buy. This is great uptrend. Okay, a great uptrend. Either you have closed there with a great profit, or maybe return to EMA 200 and closed there with some loss. Actually, you'll be closing once you start losing. You don't wait for this big loss. Once everything is buy here, buy orders. You are still not closing, waiting. The price returned. This one reversed this trend. Of course, you don't know when it has reversed, but it has reversed. So EMA 9, EMA 20, EMA 50 here. Let's say on EMA 50 you are losing. You started to lose. You close here on EMA 50. Whenever you start losing, you will be closing. Okay. Take a look at this downtrend. Sell, sell, sell. Of course, the market is not returning. The market is not returning. Keep on selling, on selling, on selling, on selling. And here, from there, you will be closing either here from your decision or from there because the market has returned to EMA 200 ending this period. Again, sell, sell, sell. All of these returns are still nothing. So you are keeping sell, sell, and on EMA 200 close. And again, sell and close on EMA 200. Okay, so I think it's very clear. So I'll be applying it since the market is trading right now. Okay, let's get to the present. Let's look at euro dollar, let's say. So this one was AUD CAD, and I will be looking at euro dollar. The market is too slow on euro dollar. So now, for example, here the market is too slow. The price is very close to EMA, so you do nothing in this case. Here was a great buying opportunity. Buy. Price reached EMA 9, you are still in winning, you don't close. Reached EMA 20, still in winning, you don't close. You don't close here, you are still waiting for the market to get up further, or you will be closing on EMA 200 here. Okay, so that's it. Hopefully we can find a much faster market in this, at this moment. Okay, mainly all markets are very slow, so let me also reveal another secret. We have talked about technical analysis. Of course, I have a product for a technical analysis, so you can learn about technical analysis, everything, the right information, instead of wasting your time elsewhere. And also, you will be widening your knowledge in technical analysis, which is essential. You need to know technical analysis, of course. Okay, but the secret is here because the indicators are made out of EMAs, and the secret of in fundamental analysis also, I have a product in fundamental analysis, and I advise you to learn the right way of using the news. But one of the secrets of in fundamental analysis, you go to forexfactory.com, the most popular website for the news. If all of the news in this day are yellow and one or two are orange, so it means most probably this day is going to be sideways. If the news in Forex Factory are mainly red, lots of red, so mainly in this day the market is going to be trending. Okay, so the news have big impact on either trending market or ranging market. If all the news are nothing, the market most probably will be going nowhere, which is consolidation. If you have news, the market will be trending the whole day. Okay, it depends on the expectations of the news, the traders, and everything. But the market has a higher probability of trending when you have news. Okay, here I will start showing you price is below EMAs, so I should start selling here. And as you can see, I have big spreads. Okay, price started to get away from EMAs, so here I should start selling. And now it's returning back up. So I'm waiting for the candle to get away from EMAs, but as you can see at this time, market is slow. So I'm still waiting for the price to get away from EMAs. Here was a great buy, a great buying opportunity. So we are in this uptrend. The market didn't return to EMA 200 as you can see. So most probably the market will be continuing upward. But you don't have to analyze this thing. All you need is price away from EMAs. Okay, I'm seeking a price away from EMAs to start entering to show you how it works. Okay, so everyone is very close to EMAs. And at this time you don't enter because everyone is very close, but I will be making some entries to show you. Okay, as you can see, I'm still seeking a price away from EMAs, unfortunately, at this time. So as you can see, you will have lots of very small losses, and in one win you will be winning all of these losses. Okay, in one win, in one trend, and the market is always trending, you will be making huge profits. And all of what you have lost is nothing in front of what you are going to win in one trend. You will be flipping your account even in one trend. So let's, unfortunately, all markets are, and you have to know also this secret. All markets are acting always the same. If all markets are away from EMA 200, almost all of them is away from EMA 200. If all markets are having very low volume, very close from EMAs, almost all the other markets will have the same look. Okay, very low volume, very close from EMAs, as you can see. Okay, so it doesn't matter which market you are trading, all what you need is price moving away from EMAs. I wanted to show you at least one example in this part. Okay, but unfortunately price is very close from EMAs, so no worries. I will be trading the full strategy, the whole secret, in front of you in the next part, so you will see everything. Okay, unfortunately price is very close from EMAs, so my order here is waiting order for the price to get away from me. Okay, before moving to the next part. Okay, perfect. The price started to go away, so I will be buying, just waiting to confirm, because this trend is about to end, this candle is about to end, and the price here is very close. This candle is very close from, still EMA line is very attached to it. Okay, perfect. So now I will buy. I have placed a buy order with these very big spreads, just to show you. So my stop loss is there. As you can see, my stop loss is there. Just because of these big spreads, I want to make my stop loss almost there. Because the price returned now to EMAs, and I should be closing here. So that's a $20 loss. Okay, I have closed here with a $20 loss because the price returned immediately. But I have won here $1,200 or $1,300, because when I have bought here, the price didn't return and kept on going up and up and up, and then I have closed almost there with a 1K. Let me show you. That's it. $1,316 after losing this $21. Okay, as you can see, I was on AUD dollar, which was acting the same as euro dollar. Okay, just some minutes ago I have bought AUD USD here many times, and then closed almost here, on AUD USD, made $1,300. Imagine, and now I have lost $20. Really, that's nothing. Okay, so let's move to the application in the next part of this video. Okay, GBP dollar is up. Okay, perfect. This is a great application. So I have bought a GBP dollar, and now spreads are very high because we are still at the beginning of this trading day. So spreads will get tighter very soon. And this account has also high spreads. So as you can see, my stop loss is here on EMAs. Okay, I am seeking another loss. I want to lose. Okay, as you can see, now price is away from EMAs, but we have a very low volume, so the market is very slow, but the example is very clear. My entry is very clear. That's why 99% lose, because 99% are winning all the time, and when they lose, they blow their accounts. But the 1% are always losing, and when they win, they flip their account. Now you can understand the whole secret. As you can see, losing 20, 20, 20, $20 every time is nothing when you are winning thousands of dollars. So price decided to go up. I will be buying more. I have bought more to show you how everything works. I'm still in a lose because of big spreads. Since price is going up, I'm buying more. I'm buying more, and now I'll start to be a winner. Okay, I'm still a loser, but I'll be a winner if price keep on going upward. And of course, you will not be buying as much because price didn't move a lot. But just to show you the idea here, and in the next part, I will be trading exactly applying the whole strategy. So my stop loss is still there, waiting for the price to reach EMAs. I should place my stop loss here, but to be fair enough with the spreads, when the sell line, this one, the market line, is reaching this level, actually my ask line is still above. So to be fair enough, I will be placing my stop loss just below my EMAs to break spreads in this case. But of course I will be losing more in this case, but it's fair enough. Okay, you can place your stop loss here, but I prefer to give every opportunity, every entry, to be fair enough with it. So as you can see, I don't use take profit, I use only a stop loss. And you don't need to use it, okay, mainly. So it's not about using a stop loss or take profit. It's not about win rate and how many you are winning. So your win rate and risk to reward ratio. Of course, all of these famous things are not into the equation. But if you calculate your win rate, it will be maybe 10%. But when you are winning in these 10%, you are covering all of your losses. Okay, price decided to go up further. I'll be buying more. When the market line crosses my orders, I'll start to be profitable. I told you that this one has a bigger probability of returning going up because the price was not able to reach EMA 200. You will start to read the market much better. Also on euro dollar, still not yet. So we were on GBP dollar, perfect. Okay, so I'm buying more because the price is going up further. And this is my stop loss here. Now the price is going away from EMA. Okay, now I'll be moving my stop loss. You see? That's risk management. I am moving my stop loss orders. I am buying more. Of course, you will not be buying as much as I'm doing. Maybe here you will be entering just one or two orders, but just to show you the idea of keep on buying. Okay, just that's it. Okay, price started to go up. I will be okay. I cannot buy anymore because of margin. My margin is 100% exactly. Okay, so I'm moving my stop losses accordingly. As you can see, I will become profitable in a moment. As you can see, I'm profitable. I'll be buying more. I cannot buy anymore because my margin is at the 100% level. I have used all of my margin. Okay, so as you can see now, I am profitable. I'm trying to buy more, but I can't because of my margin. Okay, $100 in profits. And I'm trying to add on my, let's add, even this one is not acceptable. Okay, fine. So the idea is very clear. And now I'm moving my stop losses. As you can see, the price trended up. Here I am, $118 in profits, still going upward. And you have to keep on it, keep on it. When the price returns to EMAs, you don't close. You keep on it, you keep on it. Okay, so price is up. Now I can close with almost $100 profits, but it's not the idea of the strategy. In this case, you should be buying more and moving your stop losses. And you can don't use a stop loss because you don't know if when the price reaches EMAs, you will be winning or losing. You are seeking losses, okay? But now I am placing my stop loss here because obviously when the price reaches EMA, I will be losing because EMAs are below my orders. But after some time, for example, riding a trend here, when the price returns to EMAs, you cannot place your stop loss here, okay? Because here you are still winning. Okay, so as you can see, the price is still going up. Take a look at my profits, 37. Price is up again. And here it was a great entry. Why? Because it's always like that. When the price wants to end this period, get close from EMA 200 and unable to reach EMA 200, and from there start trending upward, from there start trending exactly, it means this uptrend that started already from here will continue upward, okay? So when the price is getting close from EMA 200 and not reaching it, mainly the trend is continuing. Take a look, 136, and further, I'm trying to add on my profits, but on my orders, but $200 in profits, and I'm still riding this trend. And now I'll be closing whenever I'm in a loss. So I'm moving my stop losses. Here you should be buying more, so I'm not able to buy. I'll be using a mini lot. Okay, use the whole leverage. Okay, just remember that here I am buying lots of orders just because to show you the idea. But of course, you don't have to buy that much. You don't have to place that much of orders. Okay, so the idea is clear. I am moving my stop losses. When the price return to EMAs, if there, I will be closing with loss. If above, I will be closing with profits. And I will be waiting for the price to be returning to EMAs to close with a loss. And after some time like here, it will be a profit. And I can close even now with this $150 of profits or $200. Okay, as you can see, price is still going up much further, $200 in profits, and I'm still riding this uptrend. Okay, so I'll be closing this one, taking these $300 profits, 324, and much further. Okay, 334 profits. I'll be taking these 334 profits. Perfect. So I've lost $20 and I have won $330 in profits. With my $1,300 made here, I am on $1,600 in profits. That's how it will be working with you. Okay, you see it? How effective it is? So in my next part, I will be applying everything we have discussed in this video, all of this theory. I'll be applying it in my next part of this video. Okay, so see you in part 2.